Hello, everyone. I'm so excited to present three friends in the field, many of whom I've known for, well, close to 2 decades now. So anyway, I'm super excited to talk with Ted Levinson, Vivian Su, and David Lin. We're going to be talking a little bit about lending to nonprofits, to for-profits, domestically, internationally, and what that looks like, but also really diving into new models around lending. So a lot of us on this call have worked either for CDFIs or banks, but we're also looking at new models and what does that look like? What are the holes that we're trying to fill? And what does that look like in the future? And what are the different structures too? So Ted, Vivian, and David Schups none of those are CDFIs. So we'll get into kind of the pros and cons of CDFIs and what that looks like. So that should be kind of a fun conversation. But let's start with some brief introductions. Miss Sue, if you could start and then share it to Ted and then over to David.
Sure. Hi. Thanks for having me, of course, Mark. I'm the founder and CEO of LendDonate, and my company gives loans to nonprofits. At the same time, we help them source loan and donations. Our vision and mission is to source easier access, lower cost capital to nonprofits for use of basically anything. Unlike grants, we can lend for working capital, capital expansion, a lot of critical need funding, as well as the big capital funding, multi-million-dollar real estate. We integrate philanthropy so that the investors can also donate upfront and during and or at the end of the loan repayment period.
Okay, we're going to get into that because that is such a unique service offering that LendDonate makes. So let's make sure we swing back to that. Ted, please tell us about Beneficial Returns.
Glad to do that, Mark. So I run Beneficial Returns. We're an impact investing debt fund. We make loans to social enterprises addressing poverty in Latin America and Southeast Asia. We make loans of $50,000 to $500,000. And the money that we lend, we borrow from family foundations, donor advised funds, high net worth individuals, and faith-based communities.
Great. All right, Mr. Lin, let's hear a little bit about Mission Driven Finance.
Thank you, Mark, and thank you for having us. I am the co-founder and CEO of Mission Driven Finance. We are an impact investment firm and financial services company, certified B Corp. Our whole goal is getting capital to flow where it normally doesn't, but should. Our mission is around mobilizing capital to increase inclusive and equitable access to education, health, and wealth. And what that means is we are usually working with local and national investors on one side to help them create the change they want, and working with community initiatives, projects, small businesses, nonprofits, and otherwise to help them get the capital they need, and making all the, as we say, vegetarian sausage in the middle.
Sweet. So let's start with you, David, around, obviously there are banks, there are CDFIs, there are others, and this question will be for everyone. What are you guys trying to do at MDF that's not already done? Like, what are you trying to fill in the marketplace?
Sure. So for us, and it's actually similar to that gap Ted was mentioning, what we saw and when we got started in 2016 was our friends at CDFIs, at banks, at venture capital firms, at SBA lenders and CDCs and such, that there was this gap where if you're a small business, social enterprise, nonprofit that need $300,000, $400,000, $500,000, maybe up to $1 million, especially if you don't look like me, and even more if you're a service-oriented business, those employing people in the community, delivering healthcare, education services, that sort of thing, most of those lenders are asset-based lenders and based on history. And so if you don't have the hockey stick for venture capital and you don't have the asset base and the history to pull capital from those other partners, you're really out of luck. And then when you add on top of that, this gap in the system where a lot of those CDFIs, SBA lenders, those sorts of things, when you're out, especially when you're outside real estate, a lot of them have caps at 75,000, 100,000, 150,000, maybe 250. And then the bigger ones, the banks, the bigger CDFIs, they have a floor at 500,000 or $1 million. So you're just in this space where 3, 4, 500,000 for sometimes a newish business or a growing business or a service-oriented play. It's just a really hard place to get capital.
And so you're seeing that both for profit and not for profit.
Yeah, it doesn't matter if we're pretty agnostic whether we work with for-profits or nonprofits, but if you need capital in that space, it's just a tough place to find at affordable rates, even at predatory rates sometimes. And so that's where we really focus.
Vivian, where do you complement mission-driven finance, or where are you in the kind of the whole spectrum of lending? What does that look like on your side?
Yeah, I like what David said, that we're in that spectrum as well. We're generally more agnostic than some of the traditional nonprofit funders are, saying you have to serve in these areas. We want to make it easy for nonprofits, whatever area they serve, as long as they're a 501c3 with at least 3 years of track record, so that we can evaluate them first from the foundation and the basis of credit worthiness. Then as we present them on our marketplace, we actually want our investors to decide for themselves. Sometimes at a higher risk interest rate is because the risk is a little higher, and they can choose their risk tolerance. But at the same time, I can choose to step into a slightly higher risk investment than I otherwise would, because they serve in an area I care about. And additionally, our platform gives investors like me a chance to reduce the interest rate I charge. If the fair market rate we say is 8%, I can choose to invest in 5 if I wanted to.
Okay, well, we're going to hear about platforms and technology, and I know you've got that pretty well cooked, but we're going to hear about everyone else's technology as well. All right, Mr. Levinson. So for-profit, not-for-profit, what's your story? Where are you?
I don't care. Listen, that's just an IRS designation. What we care about are results, impact. We don't care how you're structured. We have borrowers that are for-profits. We have borrowers that are nonprofits.
Yeah.
And we're trying to fill 2 gaps. And by the way, David, I'm sure you agree, Vivian, there are so many gaps, okay? We've talked about 2 of them. We also have gaps around lack of working capital. We have gaps at the very early stage. At Beneficial Returns, we've noticed that there's so many small social enterprises trying to address the massive problem of poverty. And we think the best thing we can do is help the most promising social enterprises grow. So on the demand side, what we're trying to do is to provide affordable long-term loans to social enterprises that are working in geographies where it's really hard to secure that money. Most banks in Mexico, in Cambodia, in Paraguay, in Thailand, in the markets where we're operating, they don't offer long-term loans to borrowers that don't have real estate as collateral. And then on the flip side, we see, believe it or not, over $1 trillion sitting in family foundations and donor advised funds in the US. More and more of this money wanting to be used for impact investing, but few people having the resources and the skills to find borrowers, negotiate term sheets, underwrite loans, bill and collect loans. That's what we do. Yeah. So we're here to make that, move some of that $1 trillion of money over to social enterprises that we believe have the best solution to poverty, and then return that capital to philanthropists before they're ready to give that money away.
That's great. And so just to be clear, you're only international or you're also domestic?
We only finance social enterprises that are working on the ground in Latin America and Southeast Asia. Some of them have US entities and will make the loan to the US entities, but we want to see businesses that are reducing poverty in Latin America and Southeast Asia.
Okay, and then Vivian, you're domestic only, correct?
Yes. Same
with you, David?
Yes, US private credit is our general focus.
Okay, great. So